Hi guys, welcome to 365 days, 365 concepts. The concept that we're going to understand today is private investment in public equity, basically PIPE. But before we start the concept, I want to write a sentence here which is substance over form, which is the essence of this concept. Now imagine a company that is listed on the stock exchange, basically a public company. Okay, sir. The public company needs money immediately. Immediately means they, in the shorter term, they quickly need the money. Okay, sir. How can they raise the money? Sir, they can go and issue additional shares to the public and raise more money from them. Sir, why do you say additional shares? Are in IPO, they would have already issued shares to the public and raised money. Now they can again issue the shares and raise money to the from the public. Okay, sir, possible. But what is the issue with this? Sir, they need money immediately, and issuing additional shares to the public and raising money from them takes time. Sir, you have to, fulfill various regulatory requirements, go to SEBI, go to what do you call your exchange, file various reports, do all of that, publish advertisements, do all of that. Sir, it takes time. It is not a process which can be completed sooner. Okay, we understand this fact. So then what can a company that is listed, basically a public company, what can they do in this case? Sir, they can go for pipe. Sir, meaning they can go to certain accredited investors. Accredited investors. Sir, what do you mean by that? Example, your HNIs, wealthy individuals basically, your mutual funds, you can go to all of them, and tell them that, listen, this is what my company is. I'm willing to sell my shares. Please buy the shares of my company. Okay, sir, what purpose is it going to serve? I will be able to raise my money much, much faster. Because if I had to go to public, I would have had to, fulfill various regulatory requirements, all of those things. But when I go to these HNIs, to these mutual funds, basically to accredited investors, whenever I go to them, I invite them to buy the shares of my company. I'll be able to raise money much faster. Okay, sir, we get that as well. But why is it called as private investment in public equity? The statement that I wrote at the start, substance over form. Sir, in essence, if I were to take a look, here the investment is happening in a private manner where the company is not going to the public. It is not, publishing advertisements and doing all of that stuff. It is privately inviting certain individuals, certain mutual funds to come and invest with it. Basically 200, 250, 300 individuals or mutual funds, depending upon the kind of money they want to raise. So, sir, in a public company, the investment is happening how, sir? In a private manner. When I just look at the transaction, the structure of the transaction, I will say that, okay, sir, this looks like a public investment because the shares that are being bought by these mutual funds, by these HNIs, are the shares of a company that is listed. So, sir, it should be a public investment only. Why is it called as private investment in public equity? Because of the manner in which the transaction is happening, where individuals are personally invited or mutual funds are invited and they are asked to come and invest in the company. Obviously, sir, that's what pipe is. And obviously, sir, we need capital for business, for growth, for business growth or for restructuring. And sir, why do companies prefer going for pipe? Because, sir, associated costs of raising money from public is extremely high or is high, and there's a lot of time also that is required, and that's why this is beneficial as a setup. So now you will say, isn't that a disadvantage to the existing shareholders of the company? Yes, it is. And that's why the shares of this public company, which is listed, cannot be sold by HNIs and mutual funds immediately after buying in a setup of pipe. There's a certain restriction period before which the HNIs, the mutual funds, cannot sell the shares of such public company. Right. And that's why this entire concept is based on this essence, which is substance over form. Because even if the form of the transaction looks like investment is happening in a public company, but if I look at the substance, the way the investment is happening, That is why it is called as PIPE, private investment in public equity. I hope you guys understood this concept. Please like, share, subscribe, and comment. If there are any doubts, feel free to ask in the comment section, and I'll be more than happy to answer them. Thank you so much. Bye bye.